Hey everyone, hopefully you're having a good day. Again, my name's Andy with the Finding Value Finance channel. I've got Scott with me. He's from the Sow and Reap Capital YouTube channel. So if you guys like what Scott has to offer, go subscribe to his channel, go over there, check it out, see what he's got. He's also a commodity investor. And we're not just commodity investors. We invest in absolutely everything. It just depends on the timing. And right now I am very much a bull in commodities. So we're going to steer this in a little bit different direction this time. We're going to talk about kind of maybe almost our own personality types or maybe personal interests or how we live, how we got to where we are, kind of our background maybe a little bit, and how we view money, how we view investments, kind of maybe that type of aspect. So Scott, tell us a little bit about your background. Tell us a little bit about how you view money, how you view investments, and how that's changed maybe over the time of maybe where you originally were at versus today. A lot of questions there.
Yeah, a lot of questions. Yeah, I guess back in the days when I was really young and before I became a Christian, money was probably the most important thing to me. But right now, it's nowhere near as important. I would say it was really funny. Just before we started recording, I was like, matching shirt, Andy.
I know.
And he was like, look at mine. Like, it's got no logos. This is what I wear. It was literally like $2-3. So, like, same. Mine was like $3, literally $3. So, yeah, I just buy all my shirts from like Kmart. I just don't care. I just, I don't know. Money's not that important. And I think I've talked about it previously on my channel, but I've had like so many cars because I'm a bit of a car nut. I love my cars. But you know, the best cars, the cars that I've enjoyed the most are like the cheapest ones, like the oldest ones. The car, can you let me share my screen? I'll just show you.
Oh yeah.
I've driven all sorts of cars in the past, right? But the car that I enjoy the most, I don't know if you know this car, Andy, but I'll show you. It's literally like 10 grand for this car.
Yeah, I know a whole bunch of cars. You're probably not gonna.
Yeah, Renault Clio Sport 197. It was like red in this color. I bought it like when it was 10 years old, and it gave me the biggest laugh ever.
The car's actually not that bad.
It's actually pretty good. And Andy, do you want to talk about your favorite car? Because we're talking about, okay, what are you going to do if we make tons of money, right? And well, I was like, Andy, what are you going to get? And what did you answer, Andy?
Well, here's the thing though. Like, I buy cheap shirts too. I only divert capital to where I think there'll be max enjoyment or either max rewards in my life. So what does that mean? Having a really good bed is probably a good spot to put money. I'm not joking. Like having a really nice bed where it supports your back, it supports your thing. Like that's where I put my money. Do I put a bunch of money in like the name brand clothing? No, I don't do any of that. And I don't if I have so let's say we make a lot of money in this commodity bull market. And let's say I already have maybe perhaps more money than what I need to live on a day-to-day basis. What do I do with it? Not much of anything, to be honest. Right now, what I'm doing is I'm fighting for my freedom, financial freedom, to do whatever I want, whenever I want, at all, you know, whenever I can. So I can do what I want when I want, and no one telling me otherwise. That's like the last thing I'm going for. I'm not going for an expensive car. I'm not going for brand named whatever. I am going for literally as much time as I can do, like as I can get in my life, and spend it the way I want to spend it. That's my last goal, is a bomb rush for freedom.
Yeah. And that makes
I don't know if you're doing that too. It's up to you. I don't know what you're going for. What about you?
Yeah, I don't know. I want to do something more because I'm a Christian. I want to do something more for Jesus Christ. That's my main goal. But yeah, I mean, like even the job that I have right now, I kind of like. I don't really mind, you know, my job at all. So I don't know. Like I don't know if money can necessarily buy any happiness for me. I'm doing it because I think I can definitely help a lot of people out if I do make a lot of money, and obviously, you know, I'm all for helping out others, but yeah, I mean, obviously my wife wants, nice things as well sometimes. So I wanna satisfy her needs and wants, and same with my daughters. But yeah, like for me, like I'm content with whatever. That's just me. And I think
Yeah,
I
me
think
too.
that's why we've talked about Andy are like, why do we go through these volatile times so well? Like what's different about us? And I think really that's what's really different about us, is that we don't really care about all the materialistic things that we have or we don't have. Yeah, we just don't care. So I think that really helps.
Yeah, here's another thing. I have a problem spending money, I think. Like literally going out and spending it. Uh, I
Yeah.
I almost feel bad when I spend money versus like when money. So I feel good when money comes to me, but I feel bad when I spend it on frivolous things. And I don't know why. It's just
Yeah.
like programmed in my body or personality type or something. I'm not sure exactly what it is. So what I do is I just look for deals and find value wherever I can. So I know it's like finding value is my entire life. And
Yeah.
going back to like like liking where you work and stuff. Um, I work at a large aerospace company. I'm a manager there, and I'm not
Yeah.
going to bring up the name of it. I'm not here to bash or whatever. I guess I don't love what I do. It's
Yeah.
I'm trying to kind of veer away from it. That's why I created the Finding Value Finance website, because that's actually something I really do like. I spend all my time researching finance stuff and has nothing to do with
Yeah.
what I actually do for work. And the biggest thing, and I'll go into a little bit of a rant of what my current job is, 'cause if people want to know. Um,
Mhm.
what I don't like about it is it's 95%, what we'll call it, getting approvals, there's no value added there. So if you're in a kind of like a lean type of movement, you want to drop all of the non-value added stuff. If I sit back and I look at my job, 95% of it's non-value added. It's like you could do this very easily and quickly, if you could solve some of these problems, but some of these problems are structurally in the company. So it's like, and it's based in the designs of the products too. So if you're a new engineer, or if you're a new supply chain person, if you're a new design person, um, great companies are built off of great designs, and great companies will make great money because the designs are able to be manufactured easily. So, and if everything is around the design, if you're building really bad designs and they're very difficult to build, you're kind of stuck with it. So that's what I don't like about it is we've got very difficult designs. We have lots of problems with supply chain. It blows out to everything, and then you're stuck with it. So I think the easier realms or the easier positions are things that don't really change a lot. Like finance would be incredibly easy, or accounting, because what you have is numbers and you can manipulate numbers very easily. You can change them. There's no barriers to any of that. Working on physical product, that's really hard because you have physical things that you have to change, and it takes time, it takes effort, and it's not, in my opinion, as easy. But that's my take on that.
Yeah.
And why I want to get away from it. So
Sense.
yeah, I don't spend money. I don't have expensive cars. I actually had to buy, I would say, a mid-range house, mid-range to, well, it's pretty middle class house, because I couldn't buy a cheap, a lower priced house. There were too many bidders, and I like literally couldn't buy one. So I was like, oh, I'll just go up, and then I couldn't buy those, and I was like, oh, I'll just go up even more. And I could go up, like I could buy a really nice house, I guess, but I don't know, I didn't need to. I went up as expensive as I had to buy the cheapest house I could for the best value in the best
Yeah.
neighborhoods.
And you
So
were telling me the other day,
mhm,
that you'd be happy to live in your current house forever and ever, even if you become a
yeah,
millionaire, or billionaire.
or whatever it is, tens of millions or whatever it ends up
Yeah.
being. Um, yeah, I don't know. I don't have that drive. The
Yeah.
not the drive. I don't have the want to accumulate things that, for status purposes. I just don't.
Yeah.
It's
Same with
not in
me.
my
Exactly.
personality. And I'm a big car guy. Do you like cars too?
Yes,
Yeah.
I do. I
So
love my cars.
I own a RX-7 and I own a RX-8. I rebuilt the RX-8. It had a bad engine, so I swapped engines. I swapped transmission. I swapped the differential to the later series. I did all that stuff. I have an RX-7 that I also redid completely, put new turbo, redid the fuel system myself, built it all. I even tuned the car myself using the computer and stuff. It has a power FC if you want to know the ECU. Um, and I don't know. I've been thinking about this a lot lately. If I made a ton of money, would I get a different car? And I don't know if I would.
Yeah, I
Those are
asked
like
you
my
that question a couple of days ago. You said I'll probably just get another RX-8.
yeah. I mean,
I was like,
it,
aren't you a Porsche guy? And you said, yeah, if I was to get a Porsche, I'll probably get an old Boxster.
yep,
That,
yeah,
that
because it's
was
a
your answer.
mid-engine car, and
Yeah,
and
yeah.
I don't know. I don't. The high-end cars, they don't. I don't know.
Yeah.
I'd buy a mid-engine Porsche Boxster. I probably wouldn't even get an S, and
Yeah.
then I would redo the entire suspension on it, and then I would probably modify it a little bit for the gearing to get it up in the upper rev range for whatever I'm using it for, and then that's it.
Yeah.
I mean, fast cars can't be driven to
I
the
know.
limit very easily. They're a little bit more of a pain to get on, and I could probably beat the majority of people in that Porsche Boxster on tight winding roads over people who aren't very good drivers on in very big cars, because the big cars are really hard to drive. There's
And you're having a lot more fun than the rest of the guys as well. In
Yeah, it's
solo
about
cars.
tweaking
So
the car and refining it. You can always make a slower car pretty fast. You'd be surprised.
yeah,
If you get around, I'd say like the best car that you could probably, in my opinion, is like a 2,100 pound car, somewhere in that range. If you can get it that low
yeah,
and have like 230 wheel horse, something like that, that's like a really
yeah.
good solid
I think
car.
so.
And you want normally aspirated, and you just rip it. I mean, it is so
Yeah,
fun. It's
exactly
all
right.
the weight. So it's
Yeah,
really,
I mean, it's
yep.
exactly the same with me. The car that I want most right now is probably like a Toyota GI86 or something.
Those are
The one
expensive.
that's coming out, like rear-wheel drive,
Oh,
like naturally aspirated, underpowered. You can have a lot of fun on the road without breaking the speed limit. So something like that. Like I just don't
so
want anything else.
another thing with lower horsepower cars. Now this is turning into cars because we like cars, but lower horsepower doesn't break things. So if you're going to go race
Yeah,
it and beat on it, you can beat on it and nothing breaks. And you don't need
yeah,
huge brakes, like huge brakes in the front of the car. You don't have a lot of
yeah,
weight, so then it doesn't put all the pressure on the brakes. You save your brake pads. You have cheaper brake pad parts. You've got the transmissions usually last longer. The differentials last longer. You don't have to do all this
for sure.
other gunk to it when you put too much power down. So ultimately, you can drive the car like you stole it for a long period of time.
Yeah, yeah. No, that's exactly
Yeah.
right. I was when I was driving around in the Clio, and also drove around the BRZ for a while as well. But when I was driving around in those underpowered cars, I used to laugh at them because I had like pretty high horsepower cars before then. I used to laugh at them, but after driving those cheap, underpowered cars, I was like, this is actually where the fun is.
Yeah,
Yeah, you can rev it out.
I've
Laughing at
migrated. I've migrated to normally aspirated, and I think I would say something around the 230 wheel horse is like the perfect on a real lightweight
perfect.
car,
Yeah,
where you got about 10 pounds weight to one wheel horsepower, somewhere around that range is
I
pretty
agree.
fast. And you get too much
Yeah,
above that, it's a real handful, unless you're on a big track, to handle if
yeah,
it's in on like small tight courses, a lot of
yeah,
second, third gear. But on the big tracks, obviously you can use the power, but you better have a bunch of brakes.
yeah, yeah.
So what about like identifying trends and whatnot? I mean, that's also important. How do you know a trend's in place, and how do you monitor a trend? And I know you don't have to go through a bunch of data. We can just talk about this. Like for
Yeah.
instance, we've seen some downtrends or some uptrends maybe broken to the downside in oil maybe some uranium. It depends what it is. How do you know the uranium or oil or all that stuff? How do you know it's still in an uptrend? Like, what data do you use? Would you sell
I
based
think
off of
weekly
the?
chart.
Yep. Would you sell based off
So
the
for me,
charts?
yeah. Hold on, sorry. So if you go back to the use-all chart and just go back to weekly. So for me, the most important chart is the weekly chart, and just consistently putting in higher lows and higher highs. So nothing's broken on this chart. So
I agree.
you put a low here, higher low, higher low, higher low, and then even if we come down to like here, you're still putting on a higher low. I mean, I'm not saying we're going to come down here. I think it's more likely that we break out higher. But I mean, even if we do come down here, which is not an impossible outcome, we're still putting in higher lows. So the trend is intact, basically. Same with uranium.
Yeah, I was talking about uranium. Yep.
Yeah, the trend is very much intact. So you can see this chart putting in consistently higher lows as well. Here, low, higher low, higher low, higher low. And even if we come down to here, we're still putting in a higher low. So for me, there's nothing that causes me concern here. And I like these violent down days, as I was saying.
Why do you like those violent down days? What makes you like them?
Because I think if you look at all the charts and the moves become more violent as the bull matures, right? That's basic rule of thumb. So one thing is, if you look at any chart, like even if you look at NASDAQ just before the blow off top,
do you think the moves are getting more violent, or are you saying on a percentage basis they may be the same, but they look more violent because the dollar value? They are more violent?
Yeah, and it becomes more violent as well, actually. So as the bull matures, what usually typically happens is the consolidations become very a short term. So if you look at this, for example, let me get a date range. So say, for example, when the bull just started, you've had consolidation for 500. This is NASDAQ just before the blow off top in 2020, right? Sorry, 2000, your dot-com bubble. So what happens in a bull market is these ranges, the consolidation becomes shorter and shorter over time. So this is really short, right? So this is what I'm talking about here. So it becomes shorter and shorter in length, and that's what you would expect to see. So initially it's 580 days. I mean, it's not exactly, it really depends on where you put it, but 459 days after that, 183 days, 200 days, and then it's pretty much nothing here. And then what happens is consolidation just becomes really short. It becomes like 1-2 month drop and then shoots back up. 1-2 month drop, shoots back up. 1-3 months shoots back up. So as we mature in the bull market, what we need to expect to see is a more violent down days. And what that's indicating to me is that because we're in a clear uptrend, what that's indicating to me is that bull is actually maturing and we're ready for liftoff.
Ready for
we're
what?
ready to go parabolic.
Oh, parabolic. We're ready for the launch.
Yeah.
Is this
liftoff? Yes, liftoff.
Oh, DJ Gene, I believe, is ready for the launch. If you used to listen to old techno music.
And yeah, you see this everywhere. Like even if you look at Apple chart, I think.
So really, let's try to describe that. So as the consolidation periods were long in the beginning, they shorten up in their duration, and the reason they're shortening up is because the bulls are coming in and the buyers are overwhelming the sellers. Is that a fair statement? Or how would you logically explain the duration of the consolidations getting shorter and shorter? Do you have any?
Yeah, buyers are just stepping in. It gets more volatile because obviously there are profit takers along the way, which is probably what we've seen in uranium. Just as it reached, it's kind of like its previous resistance level. So if you look at CCJ, for example, it's kind of reached the peak of this. Didn't quite get there, but it's come up quite a bit, right? And then now it's coming down. So yeah, there are sellers there, profit takers, for example, and then the buyers step in just quicker because we know the bull thesis, we know we are early in the bull market, for example. And now we're getting retail participation potentially soon. And on top of that, we're getting institutional investors that look for bargains in this market as the liquidity is picking up. You've got all these factors piling up, which means that investors are not going to wait around for a long pullback as the bull matures. So you'll find that the buyers step in a lot quicker as the bull matures. And so, say for example, the reason why I keep highlighting the fact that we're going to have a good, we might retest this level, we might pierce a little bit here, because I see this CCJ chart. I see this as a critical level. So you've had a bunch of resistance and support all along here, and what you see here is, like the body of the candlesticks, right? The fat part of the candlesticks actually hit this level. It means it either opened or closed at these levels, and it happened multiple times here. 1, 2, 3 bars here, which pretty much exactly opened or closed at this level. So this level for me is critical, and I maybe we'll see a bit of wick below here. Maybe we'll come down and then quickly retest that and jump back up and put in a little nice hammer looking candlestick or something like that. Maybe, I'm just guessing. But yeah, I feel like buyers going to just step in quicker and quicker. And we've seen that during the last bull run. So initially, I mean, if you look at this whole period, you can say that this whole period is consolidation. 487 days of consolidation where you've done nothing for 1.5 years. And then it just becomes shorter and shorter. So you can draw a line here, maybe say 150 days consolidation. And then you just have a fat run, which is what I'm kind of expecting after this final retest. I mean, this is something that's really hard to predict, because one thing that could have happened right now is it could have just blown right through and continued running up. That's something that's impossible to predict. And, sometimes it retests the breakout level, sometimes it doesn't. But, the fact that it's retesting is actually bullish as well. Because there are two ways. I don't know. Yeah.
I was going to say that big resistance line and support line, it's now a support line going across, that is a great spot to be buying, because you want to buy off support. And even if it goes a little bit below it and dips below it and scares people, that's when you should be accumulating shares, because supports, I mean, with the way that this thing is, the momentum going up, and then having that be that strong of a support line, I view that as a huge buying opportunity off that support.
Yes, I see the same. Obviously not financial advice. You've got to do your own due diligence, but yeah, I see the same. So yeah, I mean, in some cases you come back and retest, in some cases you don't. But effectively, the other reason why I like a dramatic or very volatile, I guess, movement downwards is because there are two ways in which the market can kind of recharge itself. One is to consolidate for a long period of time. It's like a sprinter. I feel like it's like a sprinter. So you can kind of like do a slow run across and recharge yourself, and then run up again, and then have a bit of rest and rest for a few days, and then do a sprint. But another thing that the markets can do is you can kind of be put on a slingshot or a trampoline. So once the market, when you're in a clear uptrend, it drops dramatically like that, what it's doing is it's refueling the runner really quickly and almost putting the person on trampoline. So yeah, if you go back in time, say for example, IXIC again, what you will see is you've got, as the bull matures, so basically you've got long consolidation, it's shortening in duration, and then once you get to this stage, it's pretty much nothing, right? So 1-2 months and then run up. And so this is what I mean by runner sprinting up and then kind of like jumping on trampoline and going up again. Jumping on the trampoline and going up again. So yeah, there are two ways in which, as I said, the market can refuel itself. Either you consolidate for a long time and rest for a long period of time, or you have a violent move downwards, which can also recharge the market for a massive move up. So yeah, I actually like seeing these pretty good dips in the markets at this stage of the bull market.
Yeah, and a lot of people get scared with these dips because they're so violent, so quick. How would you, or what would you recommend to new investors when they see this? Is this something where you got to seek your mentor and say, what's going on here? Or I mean, how would you overcome this? Because a lot of people get scared out, they get emotional, and then they sell their position, which would be the wrong move. in my opinion.
That's right. It's like runner hiring a coach, right? Should I keep running or should I rest? I don't know. Yeah, you could for sure. Another thing, I can't emphasize the importance of just focusing on the weekly time frame. So here, if you look at the Nasdaq run here, you can see that in an uptrend, it's consistently putting in higher lows and higher highs on weekly time frames. So low, higher low, higher low, higher low, higher low, higher low. And then this is when you just go parabolic. This is when you can't rest because the buyers like just step every time there's a slight drop. So when the bull matures even more, every time there's a slight drop, the buyer just steps in, pushes the price higher. And this is what the consolidation might look like towards the end of the bull run because no one's waiting around anymore. they all want to jump on board. And so, the fact that we're getting good consolidation right now, a quick one, it tells me we're still young in the bull market. We're maturing in bull market because I think, the duration will become shorter and shorter as we saw with the CCJ chart. And we've seen it again this time around as well. So as we said here, 487 days, and then followed by 5 months consolidation, and then 2 months consolidation, and then we had the blow off top. So you can see that duration is like shortening and shortening. And same with this, we've had long consolidation here. So say for example, 1, 2, 3, 4, 5, 6, almost 7 months consolidation, but consolidation has just been shorter and shorter, right? 1, 2, 3, 1, 2, 3. And then I'm expecting this consolidation to be shorter than the consolidations before. So I think it's a good sign. We're recharging again. We're recharging again for a massive move up. And if you have a consolidation and a back test, rather than it going straight up like this, it means you'll have more energy and more fuel built up for the next leg up. I know it's painful in the short term, but it just means we've got more fuel for the next leg up, which is good.
And we also have a longer duration to buy more shares at cheaper prices if it pulls back and hits that resistance line or support line, I should say, because I'm always looking to pick stuff up, and that's where I buy is off of support levels. Again, it's just my opinion.
Yes,
I don't want it to be used as advice.
Yes.
What else? Do you have anything else that you'd like to share? Because I thought that was pretty interesting on the duration of the pullbacks and how they shorten. That's highly valuable information there, in my opinion, to understand that, and the violent volatility of those moves as well as it progresses. Those are two important aspects that I think everyone should understand. Now, here's a question for you. Let's say that the trend is not broken on the commodity itself, but a trend could be broken in an individual company. How would you view that? What's your point on that? So, for instance, we just looked at oil, and oil was in an uptrend. Look at SM Energy, and it's broken its short-term trend line because someone was talking about this, and I haven't sold anything. I still own it. If you look at like a year trend, and it's probably not.
Yep. No, it's in a clear uptrend for me.
Clear uptrend?
Yep. Low, higher low, higher low. And unless it kind of comes down, and breaks this below,
20,
you can get a fake out as well.
Yep.
You can get a fake out as well. So, when I guess when you have a company that's on its own breaking the uptrend to the downside, then I think you will need to assess the fundamentals of the company. So it could be like permitting issues, it could be licensing issues for some of the miners, it could be, geopolitical issues, whatever it might be. So there might be fundamental issues that is relevant only to that specific company. So you'll have to go into fundamental analysis and actually do your research and due diligence on the company. But when I look at this chart, like I don't see anything wrong with it right now. So for me, this looks like, if I just draw a quick trend here, that probably looks like a key level here somewhere. Here, probably. You hit it there, hit it there, hit it here, hit it here. Kind of like it's a broad zone. It's a broad zone. You can't just draw one line. It's like
a band. I just put a band in it almost. Yep.
Yeah, it's like a band. Like with these type of charts, I would like to just draw a band because it's a very broad zone, isn't it, of support and resistance here. So yeah, I mean, unless it goes below this line, your weekly trend hasn't broken.
Agreed. And it's highly important to understand that the big trend is still intact, and that
look at that. Got 200 moving average coming up as well.
Yep.
So for me, if I was looking to add into the company, I would probably start thinking about getting in here. But what I would typically see in these type of charts is it doesn't just, I mean, you can have a bounce straight off like that, but you can also have a pretty good consolidation around here, form some kind of bottoming pattern, whether it be like just consolidation just above 200 moving average, or we could start forming a pennant formation. So I'll be looking for those factors. But obviously, you'll need to look at the oil chart as well to see if it's moving higher, because that would be supportive for the stock. But yeah, there's nothing wrong. It's way above 200 moving average. It looks like it complied with the 200 moving average pretty well the last time around. So yeah, nothing wrong with this chart, in my opinion.
It does look good.
Yeah, and you can see 200 moving average working pretty well. Like here, like back in 2010, it worked here, bounced off here. And then, yeah, that was probably a first warning sign to kind of start thinking about exiting, because it pierced it pretty strongly here. But yeah, here you go. Look at this. And this is what I'm talking about when I say my strategy normally is to kind of like position myself first. And then when I want to add into a stock, especially during the early stages of the bull market, I look for 200 moving average as one of my key entry points. So you can see that it's 200 moving average has worked beautifully for SM Energy during the 2000s run. So you hit it here, and then this is when you go parabolic. And this, at some stage, we'll go like this in uranium and oil as well, where we never look back to 200 moving average. So from 2005 to 2006, so almost a year, you didn't touch 200 moving average. So we'll have some of these actions, I think, where our stocks start going parabolic and we don't look back at 200 moving average for a long while.
That's good. I like it.
Yeah.
Do you have anything else that you'd like to share on identifying trends and how you monitor trends, or anything like that?
No, not really. I think simpler the better. I just look at weekly chart, look to see whether they're just putting in consistently higher lows and higher highs, and for me, that's probably the best indicator. And obviously, zoom out to monthly timeframes as well. Like, I mean, if you zoom out to monthly, I doubt you'll see anything wrong with this. And to also get rid of all the noise as well, I like just putting on the Heikinashi. So it's all green. The trend is in place. There's nothing wrong with it yet. Yeah, that's
good.
So yeah, you'll see that as you start topping, you'll see Heikinashis turn red, and that's probably when you need to start thinking about the momentum dropping down a little bit and start thinking about getting out. But there are plenty of false signals along the way as well. So you'll just have to look at all these things together, like 200-day moving averages. Look at the weekly trends, weekly charts to see whether we are consistently putting in higher lows and higher highs. Look at the pattern it's forming. So you don't want a straight drop like this. What you want is a bit of consolidation and coiling up in the charts as well. So yeah, you've just got to look for all those factors. And arc is probably something that's worth looking at. So if you see an arc forming at the top, so rather than it consolidating downwards and ready to push higher, if you're consolidating and you're moving higher, that's actually bearish, right? And that's why you call like bearish wedges and things like that.
And all the wicks at the top there too, where price tries to advance and sellers push it all down.
That's right. So when your momentum to the upside drops, so for example, like this, so you've got a strong uptrend and your momentum to the upside starts dropping off. That means you can almost draw an arc here, right? So when the momentum's dropping off and you're putting in these bearish wedges, then that's probably a signal to keep you on watch. But if you're actually going the other way around, so this is what's interesting about charts, is that a bullish wedge, when it's going down, it's called bullish wedge because it's a continuation pattern normally when you're forming this downtrend like here, and then you're shooting up. So it's probably something to watch out for as well.
Yep. Anything that's angled downward is bullish. Anything angled upward is bearish for the most part.
Yep.
For the most part.
Yes, that's right.
Yeah. Well, all right. I think that's pretty good there. You know what, Scott, I appreciate you coming on and sharing with us how to identify the big trends and how to make sure that they're still intact. And also a little bit about ourselves, a little bit about our background and what we think about money and cars and stuff. But yeah, that's good. You know, thanks for coming on. I really appreciate it. Oh,
Thank you, Andy.
One last.
Yeah, can I just share this? Yeah, so probably timely for given the volatility in the market, but yeah, do not be anxious about anything, but in every situation, by prayer and petition, with thanksgiving, present yourself, your requests to God. Yeah, just don't be anxious. We know, I mean, we've talked about the large trend that we are in right now. There's no cause for concern right now, I don't think. I mean, if you believe in the uranium thesis, if you believe that there's energy crisis, if you believe that there's energy shortage, and we need security, then I don't think there is anything to worry about.
All right. Well said. All right. We'll see everybody later. We'll catch you next time. This is Scott and Finding Value.
Thank you. Bye.
Yep.